One thing that has become abundantly clear as we kick off 2022 is that the housing market is probably going to continue down the same path that it ended in 2021. And that direction is up. The reality is there's just so much demand right now for homes, and there's just such a short supply of them out there. Now, it is the middle of January, and it already feels similar to a hot spring market, and we're not even there yet. So if you follow this channel, you know that we have been talking about this for months, and we've been preparing for it, and here we are, 2022, and exactly what we have been talking about is actually happening. People are coming out of the woodwork left and right. There are bidding wars again. There are lines out the door, cars parked all over the neighborhood trying to get into open houses, and it is just a little nutty out there. And today we're going to talk about some of the things that are driving that demand. And I've got an article pulled up that talks about one of those things, which is mortgage rates. But before we get to that, if you are new to the channel, welcome. My name is Brian. I'm a realtor here in the Boston market. And on this channel, we cover all things real estate. If you do enjoy content like this, I just kindly ask that you smash that like button and also click the subscribe button to be notified of future videos. With that out of the way, let's get into it. Okay, so this is an article from, I think it was written by Freddie Mac and also from the Realtor's blog. And it talks about mortgage rates post big jump this week. And this is from January 14th, just a couple days ago. Inflation continues to press on mortgage rates. 30-year fixed rate mortgage averaged 3.45% this week, up from last week's 3.22% average, Freddie Mac reports. Mortgage rates rose across all mortgage loan types, with a 30-year fixed-rate mortgage increasing by almost 0.25% from last week, says Sam Cater, Freddie Mac's chief economist. This was driven by the prospect of a faster-than-expected tightening of monetary policy in response to continued inflation exacerbated by uncertainty in labor and supply chains. The rise in mortgage rates so far this year has not yet affected purchase demand, but given the fast pace of home price growth, it will likely dampen demand in the near future. Will it? I don't know, but I'm telling you, there's just not enough houses for sale out there. And until that changes, what you're going to have is almost the worst case scenario. In fact, I was talking with, it wasn't a client, but it was a prospective buyer on a property that I have listed. And we were talking about interest rates and where they're headed and what that means for home buyers. And she was in a situation where she had something locked up last year, but that deal fell through no fault of her own. It happened to be just a terribly built new construction project. But we were talking about where this was headed and the fact that, yes, interest rates are rising, and the natural thinking is that as interest rates rise, that home prices will somehow come down, right? Because your purchasing power is less as the interest rates go up. So for every 1 percentage point that the interest rate goes up, you're able to purchase, your purchasing power goes down by about 10%. What's unique about the situation that we find ourselves in is that interest rates, yes, are going up, and they're going up fairly dramatically, fairly quickly. But we're just not going to see those home prices come down. There's just not enough homes out there. So if all of a sudden, and the people that are maybe on the fence about selling their home, if all of a sudden interest rates are up and the purchasing power goes down, right? So then naturally homes should come down in price because people can't afford to pay more than what they can afford to pay. But those people just won't sell, right? They'll just wait for rates to come back down again. Now, also, it's all about perspective, and we're talking about 3.45%. Let's say it's gone up 0.5% in the past 6 weeks. We're still at 3.5%. I remember my first mortgage I got back in 1998, and it was 7.25%. So that was more than double what the interest rates are today. So keep things in perspective. 3.5% is not the end of the world. It's still a ridiculously low interest rate for a 30-year note. Despite rising mortgage rates, owning a home remains more affordable than renting, the National Association of Realtors reports. The monthly mortgage for owning a medium-priced home is $1,260 compared to the average rent of $1,540. I'm not sure about that, but I'll just trust them on that. Freddie Mac reports the following national averages with mortgage rates for the week ending January 13th, and I'm not going to go through this. But the long and short of it is this. yes, interest rates are going up, but does that mean that home prices are subsequently going to be going down? Unfortunately, not. And like I've said at the beginning of this video, there are lines again outside of open houses. There are bidding wars. There are people who are, again, this is January, and this is behavior that you might see during the spring. But what happened last year, so many people came out during the spring that those buyers were just like so frustrated, and they said, oh, forget it, I'll deal with that next year, hoping that things would change. Well, they're getting ahead of it this year. So everyone's coming out of the woodwork early. And part of the reason for that deals with interest rates. So since interest rates are still historically very low, it's moving all of this business up. When will it end? I don't have the faintest idea, and I don't think anybody does. But, if I was a betting man, I would say through 2022, it is going to be another strong growth market in real estate. Unless there's some type of black swan event, the stock market crashes by 50%, or there's some geopolitical event, crisis that happens. I just can't see that this is going to change anything anytime soon. I know that's not great news for buyers. It's terrific news for sellers, especially those people who have waited a year thinking that they would be able to take advantage of, again, a seller's market. It is going to continue to be a seller's market. Will we see the same type of home appreciation in 2022 that we saw in 2021? From what I'm seeing already in January, again, the middle of January, it's freezing cold outside. It's like 7 degrees outside here. I think we might see double-digit increases again. In 2021, we saw on average across the board, across the country, it was right around 20%. Boston fit right in there. It was somewhere between 17 and I think 25% in some towns and cities here in the state. But I don't know. I think we're going to continue to see some significant gains in real estate here in 2022, which should be no surprise to anyone who follows this channel because I've been talking about this for months. So stick with me, people. If you haven't subscribed to the channel, make sure that you do that right now. Anyways, that's all I have. Again, if you did enjoy this type of content, make sure that you smash that like button. And like I just mentioned, click the subscribe button to be notified of future videos. Thanks for watching. Take care.